Everyone, welcome to CI Markets Coffee Break. I'm Tony Nash. This is a new show that we're doing from Complete Intelligence to help CI Markets users understand some of the highlights from our weekly CI Markets forecast, interpret a couple of charts, and then move on each week with a 5-minute kind of note so that users and potential users understand how to use CI Markets. So we're going to work out a couple kinks in the first few episodes, so bear with me, and any suggestions you have, any comments, put them below, send me a note, help me understand how you'd like to better see this data. So let's start looking at the US dollar. So we're looking at DXY futures. 2024 started with steady strength in the dollar due to higher interest rates and really the safe haven status of the US dollar, given things happening in Russia, Ukraine, in Asia, in the Middle East. In the summer, the dollar started to fall. DXY dipped, hitting lows in September and October. That was based on softer economic data. Part of it was due to the election. There was a more dovish tone from the Federal Reserve. Some of that came from the election. It was politically driven. We also saw some easing inflation pressures leading to expectations for earlier rate cuts. At the end of 2024, we saw a sharp rebound in DXY. This is partly on the Trump election. There were global growth concerns, especially in Europe and China. US had reported strong Q4 GDP, and geopolitical risks were fueling risk-off sentiment. So things in the Middle East, things amping up in Russia, Ukraine, things happening in China with hacks and other things. People really wanted to move into the dollar. So for our Q1 2025 forecast, we're expecting stabilization. So the dollar will remain in a higher range, but we don't expect to see us hit the recent highs that we saw in the last couple of weeks of December. By the end of Q1, we expect the dollar to be around 105, 106. Keep in mind, these aren't absolute highs, lows. CI Markets forecasts monthly averages, but we do expect a kind of a slight lowering of that dollar, and it'll settle in a kind of an elevated range for the dollar. What are the drivers of this? Well, the Fed is expected to hold rates steady, and so that limits dollar upside. There are growth concerns in the Eurozone and in Asia, so on a relative basis, that keeps the dollar strong. And we expect gradual softening in February and March of DXY as global market risk sentiment improves and other central banks, the ECB, the BOJ, signal policy risks. So in summary, a more balanced US dollar environment in Q1 of 2025 compared to the last quarter of 2024, or even the relative volatility we saw through 2024. So let's now look at the S&P 500. We've seen a steady climb in the S&P 500 since the lows in September 2024. Recent lows, of course, it's not all-time lows. We've seen strong corporate earnings, tech and consumer discretionary sectors especially, and we've seen easing inflation pressures and softer Fed policy. So for Q1 of 2025, we expect a continued upward trajectory of the S&P 500, with monthly averages reaching about 6,300, maybe a little bit higher. Again, these are monthly averages. These aren't absolute highs. What are the drivers? Well, the US economy will remain resilient. We expect positive GDP growth and consumer spending, boosting corporate profitability. We expect the Fed to hold rates steady, supporting growth-oriented equity valuations. We may even see a little bit of downside or easing in the Fed. There are a few potential headwinds. The first is decelerating earnings due to rising labor and input costs. Of course, the Fed is easing, but we still see some of those inflationary pressures in the US. So there could be some cost rises for some of those companies. Another potential headwind is geopolitical risks. We look at the South China Sea with the Trump administration coming in. We look at the Middle East. Will those peace talks with Hamas and with Israel really take effect? And will they make progress in Doha as they negotiate? We see some political volatility in Europe, in the UK, in France, and Germany, and other places. So those could potentially cause risk-off sentiment in those markets, moving that money into the S&P 500. So we have a cautiously optimistic outlook for Q1 of 2025, balancing growth sector exposure with defensive positioning. So I want to thank you for tuning into the first CI Markets coffee break. Please subscribe, leave a review, share with your network. Let us know how we can improve this. For deeper analysis and AI-driven forecasts, visit completeintel.com/markets, where you can try out CI Markets for free.